Welcome back. You're watching Money, 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 and this week we are in conversation with the top bosses at Hsbc India. They're helping us understand how to manage our wealth better and how to pick the right mutual funds. So, Ramki, I'll open this one with you. As Ravi just mentioned, having the right asset allocation mix. Now, I know it's tough to generalize, but if you're largely speaking about someone, a professional, 35 to 40, 45, looking at the present market conditions, what's the best sort of division that you would advise on? Because there's a bit of debt that everybody wants. Debt is not giving you very high returns. So how do we go about it?
So if I were to take a very aggressive person, and there are people like that as well, you could go as high as probably 60 to 65% in equity. But even that, I would break it up between mid cap, large cap, etc. And the balance between debt, some amount in gold and cash, etc. That could be an extreme. And of course, if you're very cautious, then I'd probably not recommend more than 5 to 8% in equity. So that's the extreme that you could go with. The beauty, however, is it's not a static number. Because today I could make a portfolio that looked like 60% equity. Given the way the markets moved, next year that my exact same portfolio would be looking at 50% equity. So are you rebalancing your portfolio? Are you being dynamic enough to that extent? No one's saying keep buying and selling. That's not what we're saying. What we're saying is look at your portfolio. Your needs change over time. The market changes over time. And are you being dynamic enough to take care of that? A lot of people don't do that. You get this advice very often saying buy this, buy this. No one ever tells you sell this, sell this. They never do that. So they all keep buying. And finally they're left with a portfolio that doesn't look like what they wanted to
What's the thumb rule of selling? Apart from the basic that I need the money right now, I have a legitimate reason why I need to withdraw or redeem, what else is the right way to sell, or what's the right point at which you must say that I've made enough money, I should ideally get out? Whether it's equity, let's look at equity. I mean, to keep it simple.
The question is, when you invested, what did you have in mind? If you met that goal, time to get out. Otherwise, you could always keep getting greedy. Saying, I've met my goal, but you know what? The market's moving up. Let me stay on for some more time. That could be one option. Or it could be that I have not met my goal, but somebody is telling me that's a better fund to move in. So let me move out. We did an analysis. Actually, it was both the bank and more also with the asset management company, that if you pick the best fund every year, so you put, let's say, 10,000 bucks in the best fund, let's say starting in, say, 2003. Redeem on the 1st of January of the next year, put it in the best fund and the best fund. For 10 years, you put it in the best fund. Your 10,000 bucks will grow to 40,000 bucks. Not bad, 4 times the money. But if you put it in one fund on 1st of January 2003, leave it there, an average fund. No, I'm not saying any specific fund. And leave that fund for 10 years. That 10,000 grows to 1 lakh.
Really?
Yeah. And that's an analysis that's been done. It's historically proved. So that's the whole point. Don't pick and choose.
Don't churn too much. So now you spoke about the freedom to invest anywhere in the world, and that's where I want to pick up a couple of the international funds or the funds with international equity exposure that Hsbc has, and I was looking at some of them. For instance, the Asia Pacific ex-Japan fund, the Brazil fund, the emerging market fund. In the past 1 year has actually been pretty good. I think the EM fund actually has returned about 20% in the last 1 year. The Brazil fund about 9.3%, but of course, last couple of years have been rocky for Brazil, so that fund's been slightly negative. What are the thumb rules to keep in mind when you invest in these sort of global funds? Whom are they for?
Well, I think the key thing to remember is in any cross-border fund, there is a high level of risk because it's not your natural marketplace. However, if you go into the basket approach, and I'll give you an example of Hsbc, we call it managed solutions. Managed solutions is really the multi-asset scale capability that we have. It's something which we have invested enormously for the simple reason that in asset allocation, why do you say have a bit of property, have a bit of gold, have more of equities, fixed income? Because these asset classes put together can outperform any one individual asset class individually on a risk-adjusted basis. In that, for instance, we have the ability to invest into offshore funds. Because there are varying points of time when the offshore funds can be much more attractive. But we must recognize there is higher risk.
Which is the country or the one particular geography which you like best right now, where you think people should consider?
Well, at this precise point of time, as I said, in the macro, the world economy is growing 3.5%. So the best selection would be a world selection fund.
Okay.
You invest into a world selection fund which has got an exposure by GDP across the world, you can capture all of that.
Sure, some interesting thoughts there. Okay, we need to take a very quick break, but the conversation continues. And also how to know that you're getting the right kind of advice. Who is advising you? Is your bank advising you? Do you have an independent advisor? We'll discuss some of those issues as well on the other side.